To our first conversation this afternoon. Now, with the launch of the 300 billion naira Sukuk bond on Monday, the federal government is aiming to deepen Nigeria's capital market and accelerate infrastructure development as an appetite for Islamic financial instruments and renewed investors' confidence in the country's fiscal reforms grow. Now, the offering, the seventh in a series since 2017, will fund critical road and bridge projects across Nigeria's 6 geopolitical zones, while broadening participation in non-interest debt markets. With a history of successful Sukuk issuances, the bond offering has attracted strong investor interest, underlining both domestic and international confidence in Nigeria's economic trajectory. Now, at the investors' meeting for the new Sukuk bond, Mrs. Patience Oniha, Director General of the DMO, noted that significant evolution public awareness and participation in Sukuk since the first offering in 2007. Well, let's talk to my first guest who's here. He's Professor Uche Uwaleke. He is the President of Capital Market Academics of Nigeria, to take a look at these issues and, of course, some other issues around the world of business. Prof, thank you so much for joining us. It's good to have you live in the studio.
Thank you so much, Tolu. I'm very much happy to have this chat with you, live.
Yes.
Inside your Abuja beautiful studio.
Thank you so much, Prof. Let's start with this DMO issuance of a 300 million Sukuk bond. Billion, yes. 300 billion naira Sukuk bond. It's like the 8th now, 7th in the series.
Yeah.
How does this come? Explain to us the fundamentals surrounding this, the key features of this arrangement. Tell us.
Yeah, thank you, Tolu. First, the first thing to know is what is even a sovereign Sukuk.
Yeah.
Okay. A sovereign Sukuk is a special type of bond that is issued by the FG. So when I say special type of bond, it means that there's a difference between a sovereign Sukuk and the conventional bond. And the major difference is that the sovereign Sukuk is asset-backed. Okay, when we say asset-backed, it means that it must be tied to projects. And the sovereign Sukuk doesn't pay interest. What investors get is a rental income. Of course, is a bond that is expected to comply with the principles of Sharia. One of which is, of course, the issue of riba, the issue of interest. So the investors stand to get returns based on the rent, if you like, from the underlying asset. And in this instance, it is 19.7. That return is 19.7. Yeah. So it is for the FG is issuing it for 7 years. That is the maturity period they have been using. Recall the first one they did in 2017 was also for 7 years, which the one that they just finished, repaying 100 billion in 2017. So this is also for 7 years. The return is 19.7%, as I mentioned earlier.
Yes. And
these returns are paid, semi-annually. And of course, one good thing about the sovereign Sukuk is that anytime you want your money, you can still get it. It's tradable. It's listed on the Nigerian exchange. It's listed on the, FMDQ. And more importantly, too, especially every investor would like to also hear this, that it is the returns from sovereign Sukuk are not subject to any tax.
Okay.
Any form of tax. For conventional bonds, okay, when you get your money, you pay withholding tax. But for sovereign Sukuk, no tax. So there are a lot of benefits associated with the sovereign Sukuk. And for me, what is of interest is that the proceeds, will be used to finance infrastructure, will be used to finance roads, and bridges. That is what is very, important. So any investor in Sukuk is also contributing, to the infrastructure development, of this country. So Sukuk is one good example of an infrastructure bond. Okay, if you look at our domestic debt stock today, the instruments that have been used, over the years, you will notice that the FGM bonds,
yes,
have dominated over 78%, and Sukuk, the infrastructure bonds there, and essentially Sukuk, is accounting for just less than 2%. Okay, because the size we have now, if you add this 300 billion
to it,
yes, to it, it's just like 1.3 trillion. Okay, the other infrastructure bond I see in our domestic, debt profile is the green bond, which is just 15 billion. That's what we've done. So I think it's the way to go. It's a welcome development. I would advise that going forward, the government should lean more on the infrastructure bond, given our huge infrastructure deficit. So one way to plug this deficit is actually to borrow and tie to infrastructure. Yeah.
1 trillion naira, if we look cumulatively, has been raised. We report since 2017.
Absolutely.
The DMO has successfully raised like 1 trillion naira from previous offerings.
Yes.
Would you say that we've achieved also positive when it comes to the infrastructure being invested in with these funds? Because when we drive on the road, I see the Sukuk, I see those roads, Sukuk bond and all of that. So,
in fact, that speaks to the need to even increase the size. Okay, you can see the much that the just 1 trillion, has done. Yes, if you drive around this country, all the 6 geopolitical zones, at least you'll find Sukuk signposts dotting all over, and that's just 1 trillion. Imagine if we did like 5 trillion or 10 trillion. Okay. The story today would have been a lot, more different. I was just telling you about our domestic debt stock. Our domestic debt stock is about 74 trillion naira. Of course, the total debt stock today, if you look at what the DMO has published in its website, as at 30th of September 2024, total debt stock stood at 142, trillion. Out of that, about 74 trillion is domestic. 68 or so is, external. Okay. Now, out of that 74 trillion that is domestic, are you getting my point?
I'm with you.
Just only 1 trillion, okay, represents the Sukuk. So that tells you that the bulk of it has been these FGM bonds, as I said. And the problem I see with FGM bonds is that it is largely discretionary. When you issue FGM bonds and you get the money, okay, you can use it for you can apply it to anything, okay, in the name of financing budget deficit. But with Sukuk, it must be project tied. Yes. So that is why I'm saying Sukuk is a very good instrument to use when you want to borrow domestically, particularly when you have a situation in which the debt burden, is high. We are spending so much servicing, our debt. The good thing now is that even the debt service revenue ratio is beginning to reduce. Yeah. Because somehow we are beginning to ramp up, this non-oil, oil tax revenues. So you now find debt service reducing, but it's still high at even close to 70%. All right. So the best way to reduce the debt burden that we have today is to borrow and invest in self-liquidating projects or tie them to projects. When you tie them to projects, you can be sure that at least you have your shop, the source of repayment. And of course, what infrastructure can do in this country in terms of opening up, developing, growing GDP. Yes. As a country that is targeting $1 trillion GDP, $1 trillion, okay, by the year 2030, okay, we should focus on infrastructure bonds. Let me also say this. We have huge infrastructure gap. Infrastructure stock to GDP is just around 35%. Nigeria. One of the least in sub-Saharan Africa. In South Africa, for example, we have it at over 80%. So for us to, bridge the infrastructure gap, I just read recently the Minister for Power saying that for us to have stable power supply, I'm sure you also saw it, okay, that this country needs a minimum of $10 billion on an annual basis for the next 20 years. So where would all that money come from?
Where would that money come from?
It's not going to come from your annual budgetary appropriation, no. That is why, borrowing is justified, if you like. So we can't but borrow. But in borrowing, how do we do that? How do we ensure that, when we borrow, okay, you also see the fruits or the results of the borrowing? It is not for nothing that loans or borrowing is called leverage or gearing. So borrowing should be in a position to help us move faster than we would have done if we hadn't borrowed. Okay, but for you to do that, you need to borrow right. And to borrow right, you need the right instruments. Okay, so when we use infrastructure bonds, when we are borrowing, as I said, you're sure of what the money is going to be used for. You're sure where the money, where you're going to apply it. And the beauty about Sukuk is that it has this governance mechanism that ensures that proceeds can be diverted. So once the 300 billion comes, you know where it is going to. Yes, I'm sure you've heard of the Financial Regulation Advisory Council of Experts. Okay, that of course these are experts that are also part of things they're also doing is to ensure that the funds are not diverted because they want to be sure that the Sharia principles are complied with. Okay, so there is you can to a large extent speak to the accountability and transparency, with respect to Sukuk. That's why, I support infrastructure bond any day. Okay, so I think it's a good thing. And I also want to encourage the government to continue along that path to explore the possibility of increasing the size, in the next issuance of Sukuk. Part of the challenge we have today is that if you check the budget for roads, okay, like for example, this year's budget is around 50 trillion. That's 49.99 trillion. If you look at what we have voted for roads, okay, it's really not very significant compared to the total size of the budget. And when you have that kind of budget for roads, okay, that means if you want to now borrow to fund roads, you can't borrow more than that. So that is what usually has, constrained the, what I just suggested, that there's need for us to increase the size of the Sukuk. But going forward, I think we should be talking about 1 trillion, not just 300 billion. And I think the captive market is there. The awareness is beginning to, be created. Yeah. And I think that once we increase the size, I'm sure there'll be investors, both institutional investors, including retail investors, will show interest in Sukuk.
Like we discussed off camera before we came in, that inflation figures are expected. Okay. If we look at what the World Bank is saying, they are telling us that we could decline to an average of 22%, by the end of 2025, if the central bank maintains the current tight monetary stand. I don't know how that comes to you. Do you think that the CBN should still stay with that tight monetary stance?
No, I think the bank should, maintain status quo. I think the committee, MPC, will be meeting, sometime later this month.
Yes.
So I think they should maintain status quo with a view to, reducing the MPR from the current 27.5, much later. Now, the risks to inflation are still there. Okay, that's why I wouldn't say they should, begin to reduce now. Look at what's happening to oil price. Okay, oil price, the last time I checked, $66 per barrel. Meanwhile, the budget is on $75 per barrel. Yeah. That is what is now bringing this pressure on the exchange rate. Okay, you just had, although just recently we've started seeing, some appreciation, but in recent time we also saw a lot of pressure, in the forex market. So when you have pressure in the forex markets, you have exchange rates going up, it's going to fuel into inflation. So the risk to inflation, that's still there. That is why the central bank, should watch it, should maintain the rates, for now. Maybe in their subsequent meetings, they will be in a position to reduce. I am usually for reduction. I'm a dove when it comes to, issues like this. But of course, you also know that even the 22% that the World Bank talked about is still a far cry from the target we have in the 2025 budget. The 2025 budget will have a target of 15%. So when you're talking about 22%, it's still high, all right? And for me, the way to go about inflation fight in this country is not, wholly by focusing on monetary policy. There are fiscal, sides to it. And we should recognize that. And I'm also sure that even the government recognizes that, which is why we've always said that there's need for the monetary and fiscal policies to have a handshake. Yes, because the supply side issues are there. Of course, what's happening. By the way, this inflation thing, remember, the pressure is the food. Okay, so today I'm of the view that if we're able to deal with some of these infrastructure challenges, issues around transport, okay, and then particularly insecurity. Once we're able to deal with this, of course, food inflation will come down. Once you're able to increase output, food prices will come down.
Our last conversation is about this tax bill. We were talking about this for some time, Prof.
Yeah.
And a lot of meetings. We see the House of Reps doing their bit. Also, Senate also getting on. Where are we, and what are your expectations?
Yeah, where are we? The good news is that the Senate has eventually passed, the 4 tax bills. Yeah. Earlier on, we saw this. The House also did the same. So the next move is now for them to harmonize. And I understand any moment the conference committee that has been set up will meet to harmonize just the minor differences between the two sides, and then the bill will be sent to the president for assent. I think it's one good thing that's going to happen to this economy, and I'm saying that because just yesterday morning I spoke to Channels Africa. It's an international TV station based in South Africa. Okay. I spoke to them via Zoom, and it was during their morning show, and they were asking me questions on this tax reforms. So, and in the course of that interview, it was very obvious, because it was a phone-in thing, that South Africans are also interested. Yes, because they are saying there are people that want to come here to invest. So they want to also know the kind of environment, tax environment they're going to see. Yes. So I made it clear to them that these tax reforms, will go a long way to improve the ease of doing business. Because we are talking about streamlining the multiplicity of taxes we have in this country. Okay, we have so many of them. A typical businessman will complain of multiple tax and levies. The tax reform will now streamline all of them, and so that the taxpayer will now know what the very taxes he has to pay. Certainty is one of the important principles of tax. So you need to know what you pay. Convenience is there, simplicity is there. So the reforms are meant to simplify our tax laws. That's why the Nigerian tax bill, which is the omnibus one, seeks to consolidate all these taxes, into one document, into one. So it's really, really going to help businesses. And even on the part of the businessman, you're also interested in when you produce the good, will it be bought, right? Will that be demand? What the tax thing is also doing is also to help even stimulate aggregate demand by improving disposable income. Okay? When you say, for example, you're exempting people that are earning 800,000 and below from tax, you are improving their disposable income. They've been in a position a stronger position to buy things that have been produced. The same thing for even small businesses. When you increase the threshold and say, okay, now if your turnover is less than 50 million, no more pay tax. What does that do? It also improves their investment income. So all these, foreign investors will be interested. That's why those questions came, and of course I answered them.
Of course, Prof is always there to answer this question. Professor Uche Waleke, thank you for making it a date with me in this live in Abuja studios. I really appreciate this. President, Capital Market Academics of Nigeria. Hope to see you again soon as always.
Thank you.
All right.